Good evening. I hope you're doing great. I'm here with you for the daily analysis of the USDJPY currency pair on June 10th. In recent weeks, after witnessing Japan's currency intervention to support the yen, the price dropped down to the weekly FPG zone. But after this downward move, with the subsequent strengthening of...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
The US dollar, the price once again moved up toward the 160 yen zone. We are currently analyzing the daily time frame. This currency pair experienced about a 0.6% increase just last week, and the release of US economic data played a significant role in this. At the start of this week, the price initially opened with a downward gap. We saw the price move slightly downward, but eventually it rebounded, and yesterday we witnessed a new monthly high being recorded for this currency pair. We are now reviewing the economic calendar for the current week. In the past 2 days, there haven't been any significant reports for these two currencies, and throughout the week, we don't expect any major reports for the Japanese yen. However, regarding the US dollar, later today we will see CPI reports for this currency, which could influence price movements. We are now reviewing the currency strength chart on a weekly basis. As you can see, on a weekly basis, both the dollar and the yen are among the strongest currencies in the market, with the dollar trading in a better position compared to the yen. Also, by reviewing this chart on a daily basis, we see that the dollar and the yen are trading with similar strength, which is why we haven't seen significant or broad movements in this currency pair today. We are currently analyzing the 4-hour time frame. As mentioned earlier, since the beginning of the day, the dollar and the yen have been trading with similar strength, and by examining this time frame, we can observe the upward trend that the price is currently in. Each time the price has returned to internal liquidity zones, such as the 4-hour FPG, it has moved upward, and during last week's movement, we saw the 4-hour BPR zone being filled and a breakout to the upside. In recent hours, we also observed that the price, with a pin bar candle, collected its 4-hour FPG liquidity and once again moved upward. The area where the price is currently being traded is a very key zone for this currency pair, because if geopolitical tensions increase, we could once again see the strengthening of the dollar and an upward movement in this pair. But on the other hand, Japan has previously provided strong support for the yen several times around the 160 yen level, which has led to a significant drop in the price of this currency pair. As a result of the points mentioned, our prevailing sentiment for this currency pair remains bullish. However, if you enter a trade, make sure to use maximum risk and capital management, and as soon as you reach a 1-to-1 risk-to-reward ratio, set your trade to break even. Wishing you success and profitable trades.
7 powerful volume trading indicators: footprint, volume profile, and fast scale. Level up your trading.